Breaking news out of Washington. President Donald Trump has just unleashed his toughest trade demand yet, declaring that America must seize total control over its trade routes. But north of the border, Canadian Prime Minister Mark Carney has fired back with a counterstrike that could shake the very foundations of North America's economy. Carney's Buy Canadian command is more than just a policy. It's a bold move that diverts billions of dollars away from U.S. industries and raises a chilling question. Has America just lost control of its own marketplace? Before we dive deep into this explosive trade war that threatens to rewrite the rules of global commerce, make sure you hit that like button, subscribe to US Finance Wire, and turn on notifications, because what we're about to break down will directly impact American jobs, inflation, and the country's economic leadership on the world stage. Trump's escalation, the tariffs that started it. All from the very beginning of his second term, Donald Trump doubled down on one of his signature strategies, tariffs. Steel, aluminum, and automobiles were slapped with duties as high as 25 to 30%. The White House framed these tariffs as a shield for American workers, especially in battleground states like Michigan, Ohio, and Pennsylvania. The promise was simple. Tariffs would protect jobs, revive factories, and punish foreign competitors. But the reality has been far more complicated. For America's largest trading partner, Canada, these tariffs were seen not as protection, but as a direct economic assault. And that's where Mark Carney stepped in. Carney's counterstrike, the Buy Canadian command. Within weeks of taking office, Prime Minister Carney unveiled a sweeping industrial strategy he branded the Buy Canadian command. Farmers received hundreds of millions in biofuel incentives. Small businesses gained access to larger loans. For Ottawa, this was a blueprint for independence. For Washington, it was nothing less than a calculated strike, designed to insulate Canada from Trump's tariffs while locking American firms out of contracts they once dominated. The first shockwaves, U.S. industries in peril. The effects from Ottawa's bold new policy are being felt first and hardest in the United States. Trump promised that tariffs would bring American factories roaring back. Instead, the Buy Canadian command threatens to choke off the very lifeline those industries depend on. Steel and aluminum Canadian mills were already suffering from a 30% production drop due to U.S. tariffs. Carney's relief package aims to revive that sector, while U.S. steelmakers in Pennsylvania and Ohio face a double squeeze: higher import costs plus fewer Canadian buyers. American producers now face a lethal combination, stranded with higher costs and shrinking customers. Autos Trump once called Canada's auto industry the motherlode of bargaining chips. But his 25% tariff on imported vehicles has slowed production. Now Carney has gone further. Ottawa has waived its upcoming EV mandate for domestic automakers, giving them breathing room. Billions in procurement dollars are being funneled directly to Canadian manufacturers. For U.S. automakers like Ford and GM, this is devastating. Their cross-border supply chains are being fractured, leading to layoffs in Michigan, Ohio, and Kentucky. Technology and Advanced Manufacturing Carney's $5 billion fund is funneling cash into Canadian tech, batteries, semiconductors, and aerospace. Canadian firms are being encouraged to diversify toward Europe and Asia, bypassing the U.S. entirely. For American companies in states like Illinois, Texas, and California, losing access to Canadian buyers is more than inconvenient, it's existential. Agriculture farmers in the U.S. Midwest are also being hit hard. Canada has pledged $370 million in new biofuel incentives, direct support for canola growers, and expanded credit for crop producers. Meanwhile, American farmers face tariffs, rising costs, and shrinking markets. In Iowa, Nebraska, and Kansas, farm bankruptcies are already ticking upward. Energy shifts. Canada looks west, not south. Energy is another battlefield. Canada is already pivoting natural gas exports away from U.S. pipelines toward Asia through new LNG facilities on the Pacific coast. For U.S. refineries in the Gulf and Midwest, That means less cheap Canadian feedstock and more expensive domestic alternatives. The result? Rising costs for everything from gasoline to electricity in the United States. The human cost, jobs, and inflation behind all the policy jargon, there's a human reality. Laid-off Michigan auto workers scrambling to pay bills, Pennsylvania steel welders watching contracts disappear, Midwestern farmers losing their lifeline markets. And then there's the consumer. Cars, electronics, and food, all more expensive thanks to disrupted supply chains and tariff-driven inflation. Trump promised to defend the forgotten American worker. But the optics are stark. Every shuttered factory and every farm foreclosure now becomes a visible casualty of his trade war. Wall Street and global markets investors aren't blind to what's happening. Shares of American manufacturers are wobbling. Commodity traders are pricing in lost Canadian supply. Analysts warn of shrinking exports and rising risk. Meanwhile, Canada's $5 billion resilience fund is seen by markets as a stabilizer, while Washington's tariff-first strategy looks blunt and unstable. The perception? Ottawa is playing defense with precision. Washington is playing offense with a hammer. The global ripple effect. This isn't just about North America anymore. The world is watching and learning. Europe, Brussels, and Berlin are studying Canada's strategy as a potential model for resisting US trade pressure. Asia. Japan, South Korea, and India are expanding ties with Canada as a more stable partner. China. Beijing sees opportunity in Canada's diversification, though Ottawa remains cautious about over-reliance. If Canada succeeds, other nations may follow, further fracturing the global trade system into self-reliant economic blocs. The bigger picture: America's grip weakens. For decades, Washington dictated the terms of North American trade, from NAFTA in the 1990s to the USMCA in 2020. But now, Canada isn't acting like a junior partner. It's positioning itself as a counterweight. Trump's America First strategy was meant to project dominance. Instead, it has triggered defensive nationalism among allies: Mexico, Canada, Europe, even parts of Asia. The result? A more fragmented world order, where America's ability to set the rules is weaker than at any time in recent memory. The road ahead: escalation or concession. So what comes next? If history is any guide, Trump's instinct will be escalation: more tariffs, broader duties, louder rhetoric. Already there are whispers of new penalties on Canadian lumber, auto parts, and agricultural products. But Canada is unlikely to retreat. Carney's government has already laid the groundwork to expand subsidies and deepen ties with Europe and Asia. This could quickly spiral from a tariff skirmish into a full-blown trade war with generational consequences. The risks for both sides. For America: permanent loss of Canadian markets, rising inflation, fractured supply chains, and political backlash at home. For Canada, short-term gains, but risks of ballooning subsidies, fiscal strain, and potential blowback if global demand falters. But the symbolism may be more powerful than the numbers. Canada has shown that even a middle power can stand up to Washington and win leverage. Final thoughts. This clash between Donald Trump and Mark Carney isn't just about steel, autos, or even billions in redirected contracts. It's about the future of economic power. Can America still dictate the rules of global commerce? Or can smaller nations carve out their own independent space through bold industrial strategies? The answer will shape not only US-Canada relations, but the entire map of global trade for decades to come. What's clear is this: Trump's demand for absolute trade control and Carney's Buy Canadian command have set two powerful forces on a collision course. For America, it means industries shaken, jobs on the line, and consumers squeezed. For Canada, it signals a new era of independence, resilience, and diversification. And for the world, it signals the dawn of a new multipolar trade order, one where Washington's dominance is no longer guaranteed. Stay tuned because this confrontation is far from over.